Well, during last week's big sell-off, you could have done three things. You could have sold, you could have held, or you could have bought. If you held or bought, you're looking pretty good right now because the market continues to bounce back, especially the crypto market. Bitcoin climbing back towards 70,000. We'll talk about that today. We don't give enough love to Bitcoin in the crypto markets on this show, but today we'll talk about that. We got some Tesla analyst ratings to cover. We got some earnings. We got some big lawsuits to discuss. And we've got none other than the Mish Schneider coming on at 8:35 from MarketGauge to discuss the markets with us. Should be a great Monday. Let's go ahead and get the show started. Welcome to Benzinga's PreMarket Prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
Alrighty, let's go through the major indices real quick. Here you've got the S&P 500, which closed up more than 1% on Friday, up about 0.3% right now. The Qs ripping higher after that violent sell-off last week. And then the DIA, the Dow, also in the green today by about 0.46%. I mentioned it. Bitcoin up another 2% over the last 24 hours. Now back up to right around 70,000 after reaching around 62, 63 last week. Let's go ahead and bring my man Dennis in. Dennis, how are we doing this morning? Happy Monday.
Happy Monday. How was the weekend?
Weekend was good. Here's what I will say is that Thursday or Saturday night, I was out a little bit Friday night too, and it was busy downtown, but Saturday night was an absolute zoo. Like I was at a couple different bars and stuff Saturday night, hopping around, like waiting in line. There was so many people everywhere. There's this one alleyway that has these different bars and stuff, and it was packed. Like it felt like you were at like a music festival, which is how. And I'm not really like, I don't mind being in crowds and stuff, but I was like, this is just ridiculous. Like I don't have to wait 20 minutes for a drink and all this stuff. So I was just kept thinking in my head, like, doesn't feel like an economic slowdown here, just based on the amount of people that were out. Again, I'm not saying that's the best barometer for like how the economy is doing, but people were out and about this weekend. I don't know if it's, people just taking advantage of the summer while we have it. Tigers game on Saturday was a good time. So either way, it was a good weekend.
Yeah, and I mean, I kind of feel the same thing up here. I'm obviously about an hour and a half north of Toronto, which I get Toronto not as bad, but on the weekends it gets very busy because Muskoka's people coming up, and it's busy up here too. I know everybody saw a zero hedge headline maybe this weekend. Canada's worst economic decline in 40 years. I will tell you, that just does not feel the case. Like there's a little bit of a slowdown, but it does not feel like we are in this full deep recession in Canada. It does not feel that way. It still feels busy. And I think, with the coming interest rate cuts coming, I think it's not, I don't think it's a time to just throw in the towel and get rid of all your stocks, So you started the show with, you could have sold, you could have rode through it. We were kind of predicting that there's going to be some pullbacks in some stocks, and I had lightened up a few things, but overall, I'm not like dumping stocks and getting rid of everything because I don't feel like we're going into this big economic depression here either, AB. Even though they're saying in Canada is in full recession and it's ugly, I don't feel it in Canada either.
And you go out on the boat and stuff too. I mean, has the water been busy? Because that's expensive. That's expensive to fuel up the boats and stuff. So if everyone's out on the water, then it seems like people still got some money to spend on their to gas up their boats and whatnot.
It was so busy yesterday on the water, and I'm spoiled enough to be on the water, so I can go boating anytime. But Toronto, people are coming up, just on the weekend. So Saturday and Sunday is just a zoo around here. It was so busy yesterday. It looked like a good boating day. I was like, I don't even want to go out there today because I'd rather go out like middle of the week or something when, like a Wednesday, because there's just so much boat traffic. Like sometimes I take my kids tubing. That's absolutely not even possible, and I'm talking, we're on Georgian Bay. So, there's big open bodies of water and stuff, but boats everywhere. People are still doing a lot of stuff. You go out for dinner, it's busy. So the sensational headlines about Canada being in its worst recessions in the last 40 years is just not what I see. Maybe there's pockets outside of Toronto, I don't know. But Toronto is still busy. Toronto area is still busy. Muskoka is still busy. Don't always believe the sensational headlines that you read.
All right, well, let's get into some other headlines then. I mentioned crypto, and we haven't talked too much about Bitcoin over the past few weeks, but let's go ahead and pull up the chart here on like a daily basis, and we can see, over the last week or so, the price action of Bitcoin, because it's been pretty volatile, been
Moving
pretty,
higher.
yeah. I mean, the past like weekend. I mean, you look at this, Bitcoin has just come ripping back here up to. I mean, it got down to let's see. Is this right? I mean, yeah.
That looks right.
No, it didn't get down. Did it get down to 53,000 in earlier July?
It did. Yeah,
Wow.
it
Okay.
really got hit.
So
I
Bitcoin,
think that is correct. Yeah,
so
it really got hit early July. And then, we've bounced back significantly here. Obviously, the crypto miners have all bounced back significantly here. And what I'll say is just scroll back out to that chart a little bit further. Even later, this is fine, actually. But, we're kind of, stopping out where we stopped out, a year or two ago. But they don't give you a chance. And this is something what Guy Adami would say. And, we've watched Guy Adami on Fast Money for years. But they don't give you a chance to sell the highs for this long. And we're right back up here, the 65 to 68 to 73,000. I think eventually we're breaking out. I think eventually we're going to see 100,000 on Bitcoin. I'm hodling a little bit of Bitcoin. I don't have a huge position in Bitcoin, but I think it's 2% of my long-term portfolio, so I have something. I think as a trade, I think you want to be long here, I think we're going to start breaking out on Bitcoin. I don't think interest rate cuts hurts it either, because when you think about Bitcoin, it is obviously an alternative to money. So when you're getting like 5.8% in cash and you're getting, not nearly as much or nothing if you just hold Bitcoin, you start to think like, well, maybe I got to go and, move my money over to cash to get some interest. Now, if interest rates start going lower, that opportunity cost isn't as high. It's another reason to buy Bitcoin as well. So Bitcoin is actually, I would argue, a play on lower rates. So there's a lot of reasons to own Bitcoin here. I think Bitcoin's going to see 100,000. I don't know if it's going to be this year, but I think it's coming eventually.
yeah, and a lot of times with Bitcoin, it just moves because that's what it does, and the crypto market is volatile. We did have some kind of like, I guess, fundamental headlines over the weekend, and the upcoming interest rate cuts are certainly one of them for Bitcoin. But in the political sphere, and we don't like to get into politics too much on the show, but it's election season, we kind of have to. But Trump has positioned himself as like an ultra pro Bitcoin candidate. He appeared at the Nashville Bitcoin conference. And so he's still the favorite to win. So that's good for the industry. But now you have Kamala Harris, who's coming in, and her, her camp has started reaching out to the crypto companies. They reached out to Mark Cuban and all this stuff, and kind of trying to position herself also as a pro crypto candidate to try to, I guess, kind of subvert Trump's plans there, so that people can't be like, oh, well, Kamala is going to be terrible for the Bitcoin industry. Trump would probably still be better for it, but I think Kamala is trying to kind of undercut that. There was let's see, the Politico headline was Harris scrambles Trump's crypto play. Trump has used Bitcoin's crackdown as a campaign attack. Democrats are now hopeful for a reset. So they're kind of trying to, I guess, make good with these crypto companies so that Harris can also be seen as, if not the pro Bitcoin candidate as the choice, at least not like an anti Bitcoin candidate. So now you have either candidacy coming in and potentially being good for the crypto industry.
Yeah.
So that's something that was helping.
And Bitcoin, though, still is a Trump thing now. Like, Trump is backing Bitcoin, obviously speaking, at the Bitcoin conference this weekend, talking about, the U.S. government and a strategic national Bitcoin stockpile if elected. He says, don't sell your Bitcoin. I mean, this is stuff that the Bitcoiners and the crypto group really wanted to hear. He's trying to win that vote, to your point, AB. Obviously, there's a lot of younger generation. Maybe that's part of the vote that he doesn't get right now. So he's trying to win that vote and saying, we're going to, rah Bitcoin. And I mean, all of this kind of plays into the Bitcoin favor. And even the charts, it's like the ducks are kind of lined up in the row. Now, we're having a pretty big move here this morning. So maybe you want to wait, but maybe not. I mean, I think you want to have a little bit of Bitcoin, just my opinion.
Yeah, I think Trump even said during his speech, like, Bitcoin's going to the moon, which I don't know how how how
He's reading too much Twitter,
yeah, I don't know how much
even
I
though he's
love
supposed to not.
I don't
He's
know how
over
much
on
I
his
love,
group.
like, the presumptive, president talking about the crypto going to the moon, like it's like you're reading like one of these like crypto hodl bulls on Twitter's Twitter feed. But yeah, certainly interesting. And again, like Kamala Harris's camp reportedly trying to make good with some of these crypto companies. So we shall see. You had, I was reading about that, some of that over the weekend, but we'll get into some other headlines
Yeah,
here.
and I mean the best way maybe still to play Bitcoin could be MicroStrategy too. If you don't want to own the crypto because it's the leveraged play on Bitcoin. I mean, can't look at the PE, can't look at that. You got to look at how many. And apparently now MicroStrategy has bought so much Bitcoin that they actually own 1% of all the Bitcoin that will ever be created. So they actually are over 1% now. Like Michael Saylor is all in on Bitcoin. And it was a fabulous call, and that is why you see MicroStrategy, up 1,000% here, basically in the last 2 years, because he's made this leveraged bet on Bitcoin, where he does offerings and he buys more Bitcoin with it. I mean, that's what MicroStrategy is. It's basically just a Bitcoin holding company right now, levered up buying Bitcoin.
Yeah, and then I mean, it's tough because I mean, if Bitcoin draws down even like 10%, then you see MicroStrategy get him, and you can even see it back in
Goes
less.
the other way. Hey, that's what leverage is about. The double-edged sword. When your asset falls 10%, your leverage plays fall 20 or 30%. So we know that works too. But one more, and then we're going to move away from Bitcoin. It's not a Bitcoin show, but Mara is another one that looks kind of constructive here. It's kind of been hanging out here just for quite a while. Not really going anywhere. Every time I bring it up, it's around 20. I think eventually we're going to get a breakout here on Mara. It's having a pretty decent little day, but you know how I talk about, the pop, and then if you zoom in, the little hook, well, we're getting that in MARA here right now. I kind of like the setup in MARA. Now, we did just have Trump speak. We did, have the crypto conference. Is this, a sell the news event? I think you maybe want to wait just to make sure you don't get some, a turnaround and it turns into a sell the news event here today. But there's a lot of reasons to be bullish Bitcoin here going into the second part of this year.
All right, and the last thing I'll say about the crypto thing, before we move on from Bitcoin, I don't know. I mean, there are a lot. So I just looked it up. Around 40% of American adults now own some form of crypto. Now that seems inflated because I guarantee you that a large percentage of that 40% bought like a little bit of crypto, during a bull run at some point. I doubt that actually 40% of Americans hold like a significant amount of crypto when it comes to their savings or portfolio. And I don't know how many voters are actually going to be voting based on what's better for Bitcoin, but there will be some. The other thing here too is like, Trump was talking about a strategic national crypto stockpile.
Yeah.
And a lot is made of, about how much money the government spends and stuff. And like, I'd assume there would probably be better ways to spend, say, a couple $1 billion than just buying Bitcoin as the government. But who knows? Maybe it's not the worst idea in the world. I don't know. Either way, that seems
Where
like
they
it.
getting that money to buy the Bitcoin too? I mean, we're running deficits like crazy here.
Yeah,
So
exactly. That's what I'm saying. Is they're going to ask the Federal Reserve and Jerome
we
Powell,
need
say
more
like,
money. I
hey,
don't think that's probably going to happen.
yeah, cut us a big check so we can buy a speculative asset that could draw down, 20, 30% at any time.
It doesn't sound like something the U.S. government's going to be willing to do. So
No, but I think a lot
I
of
wouldn't get too much behind that too.
I think a lot of people that talk about the deficit would, be okay with it if Trump does it, but if someone else did it, wouldn't be okay with it. But let's move on from the Bitcoin headlines, and we'll go to Abbott. Abbott Laboratories, which of course produces a lot of baby formula in the United States, facing some lawsuits here, and a big lawsuit. So was ordered to pay $495 million in damages in its baby formula case. This was baby formula specifically for premature babies. We were talking about it on the pre-market show, Dennis, and that this was just the ruling for one of the case, but the company faces like 100 more of these cases.
1,000.
1,000 more of these cases.
1,000 cases have been filed against Abbott Labs. Reckitt, which is, I believe, a British company, also involved in this. This is like the Johnson & Johnson baby powder case here, part 2, and obviously for Abbott Labs. So people coming in here and buying the initial dip on Abbott, Maybe you do, but we know how depressed this has made 3M for years. We know it's held Johnson & Johnson back for a number of years, although J&J is finally showing some life here the last little while, as maybe they're trying to find a way out of years of their baby powder case. I mean, we're in the early innings here. You get one verdict, $495 million. You got 1,000 lawsuits. Now they will appeal. The final payment will probably be a hell of a lot less than that. But JP Morgan was thinking that this verdict would come in at 60 to 100. It came in at 495, which is over, 5 to 10 times as much as they thought it would be. It doesn't take hard math to go 495 million times 1,000, and you can quickly get into, heavy billions and billions of dollars here. $495 billion, obviously, again, going to be appealed. It's not all going to be that high, but you can see in like a worst case scenario that this is like Abbott's in trouble. So not saying in a worst case scenario. Now they're going to find a way. I don't think it's going to be the end of Abbott Labs, but we saw for 3M and the earplugs. We saw with Johnson & Johnson with the baby powder. We're just, really getting started in the early innings with Abbott and the infant formula here. So I think you want to let the dust settle a little bit here. Don't get so excited and saying, well, what a great company, what a great opportunity here. This now breaking down below triple digits, I think, it may pop back up because we're in this buy the dip mentality here today. But I think if you're coming in here, this could get a lot uglier here going ahead. So I don't think the news flow going to be great for it. I'm actually staying far away from this one.
Yeah, and I usually don't go, too hard on companies when it comes to like my articles and stuff. But I remember this was an article I wrote. Let's see. Oh wow, a couple of years ago at this point. The time really people weren't kidding about that, Dennis, when they say the older you get, like the more time flies. Like if you would have asked me how long ago I wrote this article, I would have said like maybe last summer. This was May 2022. So Abbott spent $5 billion on stock buybacks instead of fixing its baby formula factory. So it was actually a Strategist, Michigan plant. Formula produced at the plant was recalled after unsafe bacteria was found in batches of the product. And they had this problem and knew about it for a while.
Holy AB, you're all over this.
Yeah, and this was a different issue. But either way, like it's a baby formula issue from Abbott that they knew about since like October 2021, and waited until complaints started coming in about babies getting sick before they started actually fixing that issue in the factory. And so but at the end of the day, I think Abbott still produces a very, very large percentage of baby formula in the United States under a bunch of different brands too, which is like something that you see a lot in America, is that like one company will produce, a product under like 10 different brands. So I doubt that the government will really let Abbott, like if all the 1,000 lawsuits end up getting $450 million, settlements, the company's going to go out of business. And I don't think
that's the worst. And it's not going to happen. We saw
they can't afford
Johnson & Johnson.
They can't afford that because
but you've got a company with $170 billion market cap facing, if you did the math, 400 or 500 billion in lawsuits, and you're like, well, I'm going to stay away from this investment for a little bit. That's my take. Let's get more information. Let's see, some settlements coming. Let's see a plan to get out from underneath this, a better plan, because this is some serious news here for Abbott. So this isn't like nothing burger. Oh, we have an SEC investigation or something, or, this is serious crap here. So I think it being down 5 points is warranted here today. I'm not buying this dip.
And I mean, so even this one issue back in May 2022, when that one plant was out of commission, the out of stock rate for baby formula was around 40%. So imagine if Abbott as a company had to, went under or something like that, it would be game over for the baby formula. And someone in the chat saying it's unnecessary. I don't know how true that is, because I think there are a lot of women that medically don't or can't. I don't know. I'm not an expert in this, but I think they can't or don't breastfeed for different reasons.
Well, we adopted, my first son, as a baby. So,
kind of needed baby formula.
There's a kind of need baby formula when you adopt. So, there is some cases where baby formula is absolutely essential. Sure, breast milk's always the best, but sometimes you don't have an alternative there. So, and in some cases, it's just some mothers just not able to feed. It's just not producing enough milk. These scenarios happen. So there is baby formula needs out there.
Yeah, so I don't know. I mean, I disagree with that comment, but all right, let's so Abbott,
Like Buzz Lightyear, just saying he's saying 490 million for 170 billion. We're saying 490 million is one case. One
case,
case.
and they still face 999 other of
99
them.
more.
And now
So
there's
yeah,
and now
one
and
case, 490. So don't take the headline and say, oh, $500 million, whoop-de-doo-dah day. There's 1,000 more of these cases coming. That's 500 billion. Ooh, that's a big number. So just keep that in mind. Lots of cases out there.
And just to wrap a bow on this, I mean, specifically the problem with this was that apparently Abbott did not do a good job of disclosing the fact that using its formula for premature infants opened the door for like more health complications than the alternatives to formula. So I think parents of kids with that were premature thought, okay, we're using this baby formula, it's fine, it's about the same, but in reality, those premature babies would have been better off with other alternatives besides the formula. So that's, I guess, the crux of what was going on with these lawsuits here for Abbott. And I'm with you, Dennis, that like we've seen what happens over what's happened with J&J, what's happened
3M.
with 3M.
We just have too much precedence here when you start getting in these situations. Now, 3M, this could be a segue into 3M here as well, because it's shot up on Friday, and the 3M
this had to
news,
be the best day for 3M, and
yeah,
if not ever, then
and they've been under this earplugs thing for like I feel like a decade here. But 3M shot up on Friday, something fierce. I guess it was that day where your EPS was coming out and they were running. Bristol Myers was similar. We know I participated in Bristol Myers, but it's got to be best day in years as well. It was that kind of day where they were just beating down value names. I don't know if there was anything else here. Maybe they said something on the conference call. I'm not a big fan of listening to the 3M conference call, but maybe they were talking about, some of the earplug stuff too here, because this was a huge pop for 3M on Friday.
Yeah, and we've talked a lot on this show about if when you're looking at 3M from the valuation standpoint, oh my God, it looks so cheap. It pays a dividend. This is nice. But you had that overhead cloud, that dark storm cloud of this lawsuit. And so, it looks like at least the market's telling us that maybe the company's finally able to put some of that stuff behind them. I don't think fully resolved yet, the earplug case.
Seems like it never is going to be fully resolved.
No, it certainly doesn't. But again, up 23% on Friday, which is just an incredible move, especially for a stock like 3M, which is typically, more of a slow mover, kind of boring stock. And then all of a sudden you have it popping like it was a GameStop or AMC on Friday. So,
and Bristol Myers too. I mean, this was a huge move for Bristol Myers, on an earnings to go up 10% off the earnings. And I think just expectations here, people just not interested in these stocks. But all of a sudden, the value with the recent weakness we've seen in tech, you're starting to see some of that value come to life. It's why I bought Bristol Myers more shares a week and a half ago. And I look at that and I'm up like 18% on those shares that I bought a week and a half ago, which is incredible. Incredible move for Bristol Myers. I don't think chasing at this point in time is a prudent thing to do. But, there was definitely an opportunity. That rotation station started to happen. Market get a little bit more defensive, beat up 3M, beat up Bristol Myers, showing some life. The recent tech weakness, definitely a catalyst for that. Along with the earnings, obviously.
And you talk just about value in general, like pulling up Burke B's chart here. Like you can't tell there was a big sell-off in the market when you're looking at Berkshire. It's just kind of trading right around all-time highs. Like, and it feels like defensively, if tech continues to be weak, then a lot of names in Buffett's portfolio continue to perform well. Then you still have some exposure to tech with, of course, all of its Apple holdings and whatnot. So whenever you can look at the Dow, but the Dow's got Microsoft and a bunch of tech in it too. So whenever we're talking about value, I like to look at Burke as kind of a index that tracks that. And so certainly you're seeing some of these other stocks start catching some investor attention. As tech, like I don't want to say rolls over because it's been bouncing back, but certainly the Nvidia, the semi story has cooled off a little bit here. And I think we're hearing more and more experts talk about, we got to wait and see how long it takes for this AI investment to pay off. We got to wait and see which companies are really seeing increases in earnings based on their AI investments versus it just being a go out and buy everything you can touch that is even AI related, whether it be semiconductors, whether it be, Google, Apple, Microsoft. So I think, again, like as that story kind of cools off here, we are coming up on interest rate cuts, which should be good for the semiconductor stocks. But again, you have to wonder how
It's
much of
better
that,
for the other stocks. So that's the whole
how
thing.
much
And
of it
this
has been
market
priced
only has
in
so
too.
much capital. It allocates from here to there. And I'm doing the same thing, rotating out a little bit of tech, bought a little bit of healthcare in the last few weeks. Obviously happy that I did that. But you can clearly see there's only so much capital going around here. It's not like money just flying into this market and all that cash that's been on the sidelines coming in. We're not really seeing that yet. We may start to see that when interest rates start to go down, though. And that's another reason why we may want to own stocks towards the back part of this year, different stocks. But you're talking semiconductors. This might be a good segue for us to move on and get into our first earnings stock of the day. And it is on semiconductor ON, having a big pop on their earnings. They broke right as their show started at 8 a.m. Give us those details, AB, and we'll break down the technicals.
Let's do it. On semiconductor, 2024 adjusted EPS, or Q2, sorry, came in at 96 cents, beat the 92-cent estimate. Sales came in at 1.735, beat the 1.729 billion. So double beat there, albeit pretty slight, 4 cents on the EPS and about 10 million on the revenue. But they expects revenue of 1.7 to 1.8 bill versus the 1.73 estimates, and adjusted EPS of 91 cents to $1.03 versus the 92-cent estimate. So that Q3 guidance a little bit on the strong side there, enough to send the stock higher by about 8%. We'll go over the chart on the daily level. You can see had a drawdown with the rest of the semi market in the last week or so. Went from about $80 all the way down to 68. Now bouncing back here up to around $76. So kind of just getting back to where we were around mid-July.
Lots of overhead supply in here too, 76 to 78. So it's not surprising if it starts to slow down a little bit in this area. Now, if we get this huge tech rally, we're having a good morning for them to report. If this was a morning that the S&P was down 25 points and On Semiconductor is bucking the trend and popping 6, I'd say sell it and short it. But, that's not the case. We're actually having a full-on tech rally here this morning before On Semiconductor reported. So that's the good news. It's reporting into a good tape here this morning. The bad news, again, is that overhead supply. 76 to 78 is tough to go ahead and buy it all at this resistance. The stock is in a clear downtrend for the last 2 years, unlike so many other semiconductors that are in uptrends. This stock topped out in August of 2023 at $111. So completely different story here. I think I'm going to stay away. Like, this is a curveball here. I could see this thing, continuing up to that 78, 80 area. I could also see this thing leaking it back. So sometimes you just don't swing at the pitches. I'm staying away from On Semiconductor today.
Yeah, and it's tough too directly after earnings to know, where the follow through is going to go. If there's going to be a little bit of profit taking, or if the move will continue. We do have some other earnings stocks as well. Mickey D's reported this morning. You wouldn't be able to tell from the chart, though, up 0.4%. Let's go ahead and get those numbers, though. EPS came in at $2.97, missed the $3.07 estimate. Sales came in at 6.49 billion, missed the 6.6 billion. So that's a double miss, and not really, by a decent amount there. So surprised the stock is still trading in the green. But we did see, let's see, did they give any? No, it looks like they didn't give much.
Global
updated
comps
guidance.
Decreased 1%, reflecting negative comp sales across all segments. I mean, we've talked, McDonald's is struggling right now. And there's a reason they came back with the $5 meal. We were talking bearish about this thing at 280 and 290, and we've got the story absolutely correct here as well. Now you start seeing it pop on news, that, isn't that great. But I mean, when stocks stop going down on bad news, you're getting some seller exhaustion here. McDonald's is still a fabulous company. They're probably going to figure it out. People may be thinking the $5 value menu or the $5 meal deal is going to bring them back, because that's the problem. I go to McDonald's and I'm like, holy crap, this is so expensive here. I might as well go to a sit-down restaurant. So they need to address that. They are addressing that, and that's probably going to help them. McDonald's still a great franchise. I think, with the stock not going down on bad news, that's a good sign, but I'm still not coming here and buying it when you get a double miss. So I'll sit back again. Lots of curveball here this morning. I know you guys like trading ideas, but I'm staying away from I'm staying away from McDonald's here as well.
What are you doing then, Dennis? Buying more Tesla?
I did last week. I bought more Tesla. It's true, actually. And I'm not the only one starting to get bullish here. There's other people getting bullish as well. Two notes. Well, first, we'll just go with Morgan Stanley. We know Adam Jonas is bull on Tesla here. And he comes out with a note here again this morning, reiterating his buy rating. Main reason, though, that we're actually seeing Tesla up, I don't think is the Adam Jonas note. I think it's actually the Piper Sandler note, because Piper has come out with a note here this morning as well, and it's titled, Tesla may have solved the self-driving puzzle, says buy. So with Tesla, actually the title, sorry, Tesla may have solved the self-driving puzzle, don't roll your eyes, buy Tesla, the note is titled. Now, the reason for this is just over the last couple of days, version 12.5 has been released. And I watched multiple videos on this on the weekend, and the one person I watch, it's like, comparing it to where we were 3 years ago, and it's like a joke, where we were in full self-drive 3 years ago is nothing. Not a lot of interventions happening here. People who are using 12.5, if you're talking to them, there's not a lot of interventions, meaning this car is doing like the majority, like not having to intervene at all in some cases. So it's getting somewhere. So obviously Piper's taking note of that. The reason I'm bringing it up is obviously, I believe in it. But Piper coming up and believing in it here as well. We think investors should consider the possibility that Tesla's decision to host a robotaxi event isn't a ploy to distract from falling EV sales, like other analysts have said. I'm just reading from the note. The analysts believe the focus on FSD at this event could underscore its importance to Tesla's future. So it still boils down, and in the note here itself, they do it well. If investors hold Tesla at its current valuation, they must implicitly believe in the transformative potential of FSD. I absolutely agree with that, because the firm's discounted cash flows, is from the note, suggests that without FSD revenue, Tesla's fair value would plummet to about $77 a share. Well, over the Gordon Johnson, $23 a share, but they're saying without FSD, the stock's worth like $77. But they're saying FSD is worth a lot of money. And that's why they're saying buy the stock here today. I'm with them. Elon Musk is with them, because he said on his conference call, if you remember from last week, if you believe Tesla's going to solve FSD, buy Tesla. If you don't, sell the Tesla now. I believe that too. If you think that they're going to fail and never get FSD to realize, you don't want to own Tesla. I'm in the latter camp, though. I believe they are going to solve FSD, and I believe it's going to be licensed out. I believe they're going to be changing the world with this product. That's why I keep buying Tesla. So what I decided, talking to my buddy Mike over the weekend, I'm going to dollar cost average and continue to dollar cost average into more Tesla. Just every week, buy a little bit more. Every week, buy a little bit more, until I don't know how high I'm going to go in my long-term portfolio. It's about 6% right now. I'm going to bring it up to 10% at least of my long-term portfolio, which I'm usually 2%, folks, 2.5%. So that's how much I believe in the stock. So I don't know the path to get there. There's going to be dips. There's going to be problems. Oh, FSD. Oh, there's an issue. Maybe somebody gets in an accident on FSD and the stock tanks. Lots of things are going to happen here. And that's why maybe dollar cost averaging in it, because I don't know the path to get there. But I believe 5 years from now, I believe Tesla is one of the most valuable companies in the world. Right now, it's 700 billion. Quite a few companies in that range. I think I can see a path for Tesla to get to worth $2, $3, $4 trillion eventually here. But I don't know the path to get there, and it's going to go like this. So that's why I'm doing the whole dollar cost averaging into more Tesla. If I get it wrong, I get it wrong. Maybe I'm going to lose 5, 6, 7, 10% of my investment account, which would really suck if I'm wrong. But I think I'm going to be right.
I have a couple things here. I mean, reading the note from Piper Sandler, like they're putting a lot of emphasis on this October 10th event. They're saying that, we shouldn't discount this as an event just to distract from falling EV sales. This could be like the real deal event. So that's kind of setting the bar up high. And we know the market has kind of a history, a preponderance of sell the news events. But if Tesla comes out on October 10th and says like, yeah, robo-taxis are ready to go, look at how great this is, they display that, then it could be, a huge thing for Tesla, and you could see that stock pop on that. But I think any sort of news or announcements that are considered underwhelming on October 10th could be, a potentially, big sell the news event.
That's October, though. That's a long ways away. So I'm not even worrying about the event so much. I'm worrying about.
Okay.
Yeah, I don't know. Again, the path to get here is really difficult. Like people say, why don't you just buy options? Well, what if go out and I was looking at options over the weekend. You can go out a year and a half, buy like the 220 calls. You know what the 220 calls a year and a half out are going for? AB?
I don't know,
Like
expensive.
$65 a share. That's like a third of the value of the stock. Well, what if they don't solve FSD in the next year and a half? Well, then those calls are going to be. So that's why I think I'm buying stock. Again, I have the luxury that I have some money, so I don't have to just lever up with options here. But I don't know the timing of it. Like options are a timing tool, and if you don't know the timing of something, it's difficult to come in. I don't know the day that okay, we're going full self-drive and this is it. Elon Musk is saying probably sometime next year, but we don't know. He never hits his timelines. What if it's 3 years from now? Well, I still have Tesla shares, and I think the day that FSD hits, I think you're going to start to, well, you're going to see a run up before that because people are going to figure it out. And maybe they're figuring it out now. Maybe we're closer than we think. But again, not knowing the perfect timing of this and knowing how Musk is with timelines, that he never hits them, makes me not want to like gamble on a certain time frame that FSD is solved in. Just owning Tesla and not thinking about it. I'm putting it in my drawer, my bed, and my closet, and hiding it and not thinking about it. And people say I'm nuts, paying 70 times earnings for a stock. Like, Denny, you're a value investor. Why are you paying 70 times? Because when you do the projections on this thing, if FSD actually happens, you could get up quickly into the hundreds of billions and even trillions. Like you can see paths like $1 trillion in revenue. It's like insane, the numbers. It must have said that on the call if they actually solve this. Now, Waymo's there. They're solving it in different ways. We know using LiDAR, obviously costing them a lot more. Their cars are $150,000 to $200,000. Tesla wants to put it on their $30,000 fleet. So, I mean, different ways people are trying to solve this. It's not only Tesla working on it. Maybe they're not going to be the first ones to fully solve it, but they're doing really well. So that's my Tesla rant.
There you go. Well, it is 8:36. Last thing I'll say on Tesla before we bring on our special guest of the day. There is a headline here in Benzinga Pro. Elon Musk gives fresh timeline for FSD access on Cybertruck, says it should be coming out in August. Now, we just talked about the timelines. If I were a betting man, which I am, I'd say that ain't happening in August, but we'll see. Maybe he'll prove me wrong there. But let's go ahead and bring our special guest on of the day, Mish Schneider from MarketGauge. Without further ado, let's give Mish our special pre-market prep. Welcome. All right, Mish Schneider, welcome back to pre-market prep. How are you doing this morning?
I'm doing well. It's certainly been an interesting summer so far, right? Lots of news and markets, the great rotation to my economic modern family. So yeah,
you're probably enjoying the last couple of weeks, Mish. You know, my long-term portfolio actually enjoying it a little bit too, because I've had all these value dogs like Bristol Myers and all these value dogs that said IWM. I've owned IWM. You listen to the show, I've had the small caps, they've underperformed. I've had them in there for like the last 10 years. My long-term portfolio is like, man, I'm like, these stocks just suck. Well, all of a sudden, Mish, they don't suck that much, and they're doing a little bit better here. So the rotation actually has helped me to a certain extent here. Talk about the stocks that have helped you. Obviously you're enjoying this, but does it continue? That's the big question. Does this continue, or is it just another value blip and we had the couple week run and then they eventually just come back into the Nvidias and they forget about all of our IWM and Bristol Myers? What are your thoughts here?
Well, my first question is, where's Joel?
He is off today. Joel, she misses Joel. We miss Joel too.
Well, yeah, I've never done the show without him, so it was kind of like, I'm not that I don't love you guys, but I was just curious. All right. Well, anyway, first of all, I say the economic modern family, and people think that it's kind of a funny thing, but the truth of the matter is that it was created because of the U.S. centricness, if that's a word, of that family. In that we have the small caps as granddad, right? Those companies in the United States. This really kind of represents not only anticipation of interest rates may be going lower, and certainly everybody's felt that they've peaked out, but also a reshoring. The small and mid cap stocks have done much better in the last couple of weeks. That's healthy. Even though our debt came out at 35 trillion, yay, we keep going up. That's a concern, but let's put that on the shelf for a second. Then we go to retail. Now, retail is obviously the consumer, 70% GDP, but XRT has been hanging in there. So that would be a really key area to watch. Now, I think that if we can get through. And if we're looking at XRT, and the reason why I picked that one, by the way, is because it's a nice combination of staples and discretionary. And if that starts to join in the party, I think that no matter what anybody says, we're still looking. We had GDP come out, people say, oh, well, those numbers are always shifted. But it could be that we've actually gotten this sort of soft landing thing coming. But we have to watch that, because if that rolls over, I would get a little bit more suspicious that we just rallied into major resistance. KRE, I mean, you want to talk about...
Oh, wow.
Right. So that's the regional banks. And that sat in a range ever since the big March crash last year, between 45 and 50 for like months and months and months and months.
Yep.
And now all of a sudden has gotten through 50. But caveat again, 60-61 was where it started to break down last March. And we are right there. If we can get through it, again, great sign. If we can't, maybe we just saw a nice pop into these major resistance. And then I think that there's IBB, which is my biotech sector. That also has done pretty well. Again, a lot of resistance, but a lot of those biotech names looking pretty good.
Yeah.
And then IYT, of course, transportation also hasn't really participated. Now, we had those dismal earnings by UPS, and then we had obviously the CrowdStrike affecting the airlines. And so that's another one that has to be given a chance to participate. And then if that does, I think in terms of the US-centric areas, we have to say we're in better shape than what we think. And people aren't as concerned with the debt as the headlines like you to believe. So that's the plus side. Now, the one member of the family, well, actually two that I left out, was semiconductors. And so the question is, does the semiconductor area have to participate as much as everything else? Well, it already has sort of done its job in essence, right? Getting us to this point where there's been so much money flow into AI, and a lot of these other smaller mid-cap companies are starting to talk more AI. So it's possible that the job that it needed to do, which is bring everybody into further 21st century, it's doing it, and it doesn't necessarily have to have a lot more upside in order for these other areas to shine. So that's the good news. The bad news is that I'm watching the long bonds, and there's a double-edged sword, right? With the double-edged sword, of course, is everybody wants lower interest rates, lower interest rates, lower interest rates. But we want lower interest rates to a degree, but what we don't want is long bonds starting to shine and looking more like a flight to safety, because people are starting to fear that the cracks under the surface are more recessionary. So that's kind of where we're at right here.
Yeah, that's a fine line, to understand why the TLT rallies, because there was a couple days, in the last month where you're seeing a TLT rally, and obviously the S&P, maybe even the IWM not participating. It's like, well, there's a little bit more fear here. At a certain point in time, you can get where, we've been, in the last couple of years looking at this market and saying, oh, the TLT and I'm saying the IWM are linked at the hip and they move together, and it's true. But at a certain point in time, they separate, and that's during economic downturns where people fly to safety of long bonds and they don't fly into stocks. So it's a fine line to say, oh, well, the IWM or TLT is rallying today, so all stocks should be higher. But you got to kind of understand the reasons for it rallying here as well. So that's the one thing to consider. Where do you see rates going? Do you think we are going lower in September? It seems like everybody thinks we're going lower in September. And is there, are we doing one cut or two cuts, or is this going to be now a path to start cutting rates, gradually here for the next course of the next year or two?
Well, I don't think that the Fed will be as aggressive as the market would like to hope, or like I said, maybe sort of false hope. It should be. I'm kind of using, I think the clearest thing to me would be like, where would the mortgage rates be that would at least help people feel better about refinancing, or maybe getting into a home that they've been sitting on the sidelines because the rates have been so high. And that would be probably closer to 5%. I don't think we're going to go below 5% in terms of interest rates for mortgages. And I like that. That's a good benchmark. So that gives us some room without under 5%. Now we have to say, ooh, what's going on? That would be scary. So that's why I'm not so sure I'm going to say, oh, TLTs are going up. This means recession and everything's going to break. What I'm saying is that we have room to ease up a little bit, which would be healthy until a point where it's not. So let's discuss the things that would be of concern, right? We still have those concerns. The debt, obviously, we just mentioned being number one, but yet we need the interest rates lower because the government can't afford to pay back the debt at these very high interest rates. So that could be a tinderbox. Geopolitics. Things have not really cooled down that much. There was a lot of headlines coming out of the Middle East and Israel this weekend. We don't know where that goes still. And I think that has to be watched as well. As far as I know, the Russia-Ukraine situation, it's kind of like back burner, but it's always there. So I think that has to be watched. And then, we are going into a tumultuous, at least that's what the forecasts are, weather season. Even though we started out, everybody said, oh, hurricanes are going to get out of control. We haven't really seen that yet, but I've spoken to some people who are sailors, actually, and they have all docked their boats because they're anticipating that could be really, really bad. So, these are all factors that are things to be watched. But the good news is that the metals are hanging in there, but they haven't rallied anymore. I mean, gold's kind of found its way between 2350, 2450. It does that, it consolidates. So we have to watch that. Silver actually came off a lot. It's underperforming gold right here. So less inflation fears. Obviously, we can see food prices have come off a little bit. So, we're not saying inflation's dead completely, but this is a nice little time right here in the summer to say, okay, we've got to pass. We don't really need anything more in terms of good news. What we need to have is a lack of bad news. And the earnings coming up will also be very key because these are big companies. Yeah, these are huge companies coming out. Like Microsoft. I'm all about Microsoft right now because I've been like this big fan of Copilot. And I think obviously they were involved with the CrowdStrike thing, but the earnings are coming out. I'd love to be adding to that position, but I'm going to wait for earnings at this point and see what happens.
I mean, it's such a big earnings week here with Microsoft on Tuesday, AMD on Tuesday, Wednesday gives us Meta and Qualcomm, and then Thursday, Apple, Amazon, and Intel. I mean, this is the heartbeat of the S&P 500 reporting this week. So making a technical call on a Monday before we get these earnings reports tomorrow starting is a really difficult task. So, do you think you just go in here and maybe just stay away from stocks until we get these earnings reports here to give us more clarity on, whether, there's a slowdown in big tech or not, or whether, everybody's just flying in AI and we've got to jump back into these things? Or do you take a shot? What are your thoughts are going into a report like Microsoft?
Well, I can tell you that from our standpoint, from the quant side, we have gotten out of a lot of the semiconductor stocks. And we've rolled a lot into the small and the mid cap stocks, especially the high earnings growth ones.
Yeah.
And that's the nature of the quants. They're always moving in and out unless we get into a big downturn, then they go more to cash. So right now, that's what they're reflecting. From the discretionary side, which is moi, I've actually taken it a bit easy. I mean, partly because it's summer and it's a good time to take it a little bit easy. But let's talk about ARK for a second.
Sure.
Yeah, because I have watched ARK for, obviously, like everyone has, years. And I have been, probably one of the people on the media who has said, seriously, Kathy, have you ever learned anything about money management? But right now, and of course, the real skeptical side of it is that her big losses really help with taxes.
Oh gosh, that's what she was trying to sell us on anyway.
Yeah. I mean, really, wow. But the truth of the matter is, I looked at her portfolio in the last couple of weeks, and I kind of like it. So, yeah, she has Roblox. That reports this week, by the way. She has Roku. She had Spotify. She has Coin. She has Hood. She has Tesla. Dennis, your baby, I heard you talking.
Yeah.
And CRISPR, another one in there. And
she's got some stocks that are perking up.
I like those stocks. So I thought to myself, well, maybe it's time to buy ARK. So I did. So that's
wow.
Yeah, I'm in ARK. I don't have a huge position, but I will add. One is because it just sort of really appeals to my contrarian nature. I always like to say that I don't just become a contrarian for the sake of being it. I look for the fundamental shift to why something that has been out of favor could go into favor. That's been my sort of signature trade. So I like that. So that's number one. ARC is somewhere where I would consider adding. The long bonds, I'm also already in a place that especially if it gets to like 94.50, 95, if we're looking at TLTs, I would consider adding. Whether they're going to go up as a flight to safety or they're going to go up just because the interest rates are going to come down a little bit. And that's been something, again, like KRE has been sitting there for a long, long time between, let's say, I don't know, 88 and 95 and gets out of a range. And I wanted to know, Dennis, in particular, what you thought of Rivian, because I've been watching that very carefully. I have not jumped in yet, but
I kind of like it.
Do you?
I kind of like it. I've called Rivian the number 2 because you got everybody backing off in EVs. You know, you've got like, and they're going hybrids, they're doing other things. Obviously, Ford's EVs just been an absolute disaster. And then you have Rivian, and it's like, is there a place for them to actually be the pure play EV makers? Probably number 2. So, I mean, and the valuations come down so much, you know, from where it was $120 to $150 a share made no sense whatsoever.
Right.
But at a certain point in time, you're looking, well, the story's kind of turning. You're getting some, you know, investment dollars coming in there now. I don't mind the Rivian story here. And the trucks are awesome looking. I love the look of the vehicle.
Well,
so whether, you know, it catches on enough, they're so expensive, it's probably lower interest rates are going to help them for sure. Because, you know, there's an expensive truck to try to finance, but you know, get rates down, the financing on that gets cheaper. But I could get talked this movie. I don't have a position right now, but talk me into it.
Well, okay, so you've already mentioned a couple of things. One is, you know, I live in Santa Fe, New Mexico. There are a million Teslas here, but I'm starting to see more Rivians on the road. And interestingly enough, my 91-year-old mother said to me last week, I think we should buy Rivian. And that's interesting because she's looking at it from a completely different, you know, she's not a student of the markets. She just gets her senses about things like, you know, 10 years ago, she told me to buy NVIDIA at $9. Okay. So,
gosh,
yeah,
really?
Her.
Yeah. Mom's the bomb. So that's in my head. But also, right, number 2 companies, as you just said, and they may learn from the mistakes that Tesla has made. And even though Tesla, I think, is, you know, a huge company because it's way more than just a car company.
Sure.
I'm looking for Rivian right here too. It's been sort of consolidating. I'd like to see it maybe get back through when it's close, $16.90, $17. And then, you know, if you want to sit with it for a while as a long-term position, that may not be so bad. So I'm looking at those things. I'm still, obviously, I love cryptocurrencies, Bitcoin being my last member of my family. Blockchain is though where I like as a very long-term play. And that too has been going between 36 and 41 just to kind of even it out. I think that's something to keep an eye on. And Dennis, I have not lost my vanity trade. I just think we're early. But some of those stocks, besides the obvious Eli Lilly and some of those ETFs like OZEM, you know, the ones that are more geared towards the diet drugs, I think that trickle effect into, well, AbbVie made a huge move last week.
It did.
Great earnings. That's one of my prime companies to benefit there. Because that allergen is part of them, and that's cosmetic surgery. I think as you start to look at makeup and fashion and, you know, self-improvement as more and more mainstream. And by the way, Pfizer reports this week that's also trying to get into.
It's starting to perk up as well. Pfizer reports Tuesday morning.
Right, I have a position there. So I guess to sum up, really, I'm light, but I have these areas that I don't mind building, and then if I wait just a little bit longer, it'll be obvious that it's time to start having a bigger portfolio from the discretion point of view. And for right now, since we're right into this resistance, and semis, if they break down from here, will definitely add pressure to the market. I don't mind being a little patient.
Well, there you have it. Mish Schneider again joining us from MarketGauge. Always great to have you on, Mish. Some great calls there. We discussed a bunch of different stocks in different sectors, from regional banks to ARKK to Rivian. So great conversation today. Always a pleasure to have you on. Hope you enjoyed the rest of your Monday, and we'll have to bring you on again soon.
Thank you so much, Aaron. And thank you so much, Dennis. I'll see you again.
Thanks, Mish.
All right, bye.
All right, guys. Again, that was Mish Schneider from MarketGauge. Always great to catch up with Mish. Some great calls there. And how about the call from her mother to buy Nvidia at $9 a share? We might be
Now
bringing
that's a
on.
call right
We,
there. That's what we needed 10 years ago. When we were
we need
starting
to
the show 10 years ago, buy Nvidia at $9. I could have been retired from this show like Joel.
we need to we need to bring Mish's mother on next time and get
Yeah.
her updated picks outside of Rivian.
She's liking, I can get talked into some Rivian. I don't have any right now, but you could talk me into it. So I wrote it down. Take a look. I got to take a closer look here. I know valuation's still a little bit crazy here, but
I know. I don't. If you're buying Rivian here, I don't think it's for the numbers. I think it's for the potential and for the story.
yeah.
And I mean,
Well, that's Tesla too. You're not buying Tesla on 70 times. Like I'm not a 70 times, you're just buying on numbers that you're projecting stuff out, going farther out, looking that, maybe Rivian could, continue, but those are expensive. They're awesome trucks, just expensive, the Rivian. So we got about 5 minutes here left. I mean, we should do the earnings preview here. We touched on it with Mish. Obviously, we're going to get Microsoft reporting on Tuesday night, which is going to be the gun. But also, we briefly talked Microsoft, AMD. We should talk AMD because, man, it is going into a report where expectations are pretty much in the gutter for AMD. And that's a funny thing to say. If you would ask 3 weeks ago, AMD expectations were really high, but then we've had this incredible sell-off in AMD from $186 a week and a half ago down to $136, losing 50 points, like 30% of its value in a week and a half. And the company didn't even really say much. It's not like this is off of, a bad earnings report. This is simply just off of rotation out of tech, out of expensive AI names and into like value names. And I don't know, I think expectations are low enough here that it actually becomes interesting going in. It's up this morning. And I wouldn't be surprised if you see like a day or two pop here. Because if you were short this thing, let's just say hypothetically, not a lot of people short AMD. Let's say you're betting on the short side of this and it was moving down like this. I'd be covering into that report. And there may be some people coming in saying, I don't think it's going to be that bad. Maybe I'm going to take a shot here. So I think you could actually see some strength into the report. You have today and tomorrow's trading action, obviously, before it reports after 4 o'clock on Tuesday night. But man, this AMD setup is very interesting.
Yeah, and I think part of what, outside of just obviously the overall, rotation out of semis, what you've seen in AMD is a lot of people that have just kind of assumed, oh my God, AMD is the number 2 player in this space. Let's go ahead and buy it with NVIDIA. It's got to go up. And then now over time, I think there is still a big gap tech-wise between NVIDIA and AMD. And you're hearing that from experts. There's a reason why, whether it's Tesla, Microsoft, Google, whoever, they're all buying NVIDIA GPUs and not AMDs. Now, that's not to say that can't change over time. But again, the more you talk to people in the tech industry, they say there's NVIDIA is still, years ahead of every single competitor. So at the end of the day, if I were going long chips for this trade, I'd still rather go long NVIDIA. I don't care about the valuation or where it's trading at. And again, but that's not to say that over time, AMD can't, take some market share or also be a player, or that there can't be, enough space for AMD and NVIDIA, because there certainly can be. But like you said, the bar kind of getting a little bit lower into this report coming out.
The bar is low on a lot of these stocks. It's such a weird earnings season. Even Microsoft, you could say, well, it's got a huge bar because it's really run. But in the last week and a half, it's come from 470 to 420. The bar came down a little bit here, actually. And if these companies, and I think you're seeing it in On Semiconductor this morning, had a big rip. These were good earnings. But, I think if you were going into a tape where it was going up, up, up into it, it would have been a different story. So it's almost like a relief, pop in these. So AMD, Microsoft, kind of the bar is a little bit lower going in. What about Qualcomm on Wednesday? I mean, this is a low bar here too, because Qualcomm has really gotten beat up. 230 down to 173, and Qualcomm's valuation isn't crazy, folks. I mean, I've been in Qualcomm and I've been in it since Sean Udall gave it to us 3-4 years ago. This is one I've had maybe even 5 years ago now, and I'm still in there. But when you look at the PE on Qualcomm, it's not like you're going crazy here. You're paying 15 times on a forward basis on Qualcomm. So, I mean, this is a value stock at this price.
what I would be somewhat worried about earnings wise for the big tech companies, not as much the semis, but for Microsoft, et cetera, is they're spending a lot of money right now on the AI investments. And maybe, it's going to take a little bit longer to get the returns there. So you may see some kind of dampened, EPS, or because they've been spending, I think Microsoft almost, more than billions of dollars on this, but I wouldn't be that deterred by that as a long-term investor, because what's the alternative? Not spending that money investing in AI right now and risking being left behind by every single other
You
tech
can't.
company.
They have to.
So
They can't risk that.
Zuck was talking about this last week, that like Meta has already spent, billions of dollars developing its own Llama, AI stuff. And he's like, and we're gearing up to spend a lot more, because the risk of not spending this money is a lot greater than the risk of spending these tens of billions of dollars. So if those expenditures get reflected in these earnings, you might see a little bit actually like, decrease in EPS or dampened EPS in the short term, based on this investment in the long term. So that could be something to watch this earnings season for the big tech companies. But it should be some fireworks.
Definitely going to be some fireworks here. And it's such an interesting setup, because the setup that we've had going into the last tech earnings season and the last few have been like they've been up, and can they beat lofty expectations? It's not that setup this time, which is really cool. And somebody's saying, what about Square? Square reports on Thursday. The expectations for Square are in the absolute gutter. This is a stock that obviously they changed their name to Block, which was just so stupid. And that was really, it's part of the demise, like $180 a share, and like Block, Square is dumb. But I mean, this is a stock that has now gotten down to a valuation that you'd think you'd never see on a Square. Like they're saying, I didn't look it up. It's 15 times forward earnings. That's what somebody in the chat was saying. I can quickly just go to the trusty Benzinga Pro and verify again. 18 times forward earnings is what they're saying. These are expectations, though. It's 100 times, on the PE, because they aren't doing well right now, but they're expecting to grow the earnings back to where they were. 18 times, on a forward basis doesn't sound that bad, but again, on a forward basis, you're always guessing a little bit. But I mean, here's a stock that just lost in the last week, AB, $72 to $60. It's down like 20% here in 5 days going into a report on Thursday. This is low expectations for this company here. They say anything right, and you could get a relief pop in there. It's an interesting setup this year for earnings season. It's kind of exciting.
It is. And we saw what happened last week when you had Google and Tesla report on the same night, and the next day, you had that huge, standard deviation move to the downside. So again, if you have like Microsoft and AMD both report great reports, we could see a similar day the next day to the upside. Or if they both report down reports, then we could be in for another volatile day. Either way, we've got a lot of fireworks this week, including outside the earnings sphere, we got some economic data on Friday. Well, we have the FOMC decision on Wednesday, but the expectation is for them to hold rates steady. Only a 4% chance that they do cut. And then on Friday we have labor data and the employment report. So lots of market moving potential here this week. And you guys know where to go to stay on top of it all. That is Pre-Market Prep, starting every morning at 8 a.m. Eastern. We will be back with Joel tomorrow morning. Thank you to everyone who tuned in today. Dennis, any final words before the market opens?
Not a lot of big companies reporting tonight. Rambus is probably one. If you like their pot stocks, Tilray is going to report. But really quiet earnings tonight. It's tomorrow that we really kickstart. And if you just want to know, Microsoft, AMD, Starbucks, Merck, Pfizer, PayPal, First Solar, Procter & Gamble, SoFi Technologies, which usually has a run. I usually play the SoFi pre-earnings run here. That's going to report there. I believe it's tomorrow night. I got to just check with Schneider. I didn't look at the time, but I believe it's tomorrow night. It's usually at night. I wouldn't be surprised SoFi shows strength into this report. It almost seems like it often has a pre-earnings run here. So I actually probably be playing SoFi from alongside. Just not taking it through the report, though.
Awesome. All right. Well, thank you guys to everyone who tuned in. Please smash the like if you haven't already. We got live trading starting up after this, and we will see you guys tomorrow morning.